Hi, I'm Pattu from freefincal. So, a reader wanted to know if this is a good time to invest in equity because he has just started earning. He has missed the bull market after the March 2020 crash, and if he wants to know if it's a good time to invest in equity, and um, I think this is the best time to invest in equity, and regular viewers will know what I'm going to say, but maybe it's not a bad idea to talk about it again for newer viewers since the time I last talked about it. All right, so uh, even if you um, believe incorrectly that over the long term the stock market will always move up, equity investing is like climbing a ladder, and you can see that best when you plot the sensex and the log scale. So you have this kind of a ladder like structure there, and you can see here that suddenly there's a huge spike, and then there can be a long periods of flat returns, and then it moves up, flat returns, moves up, then there's a small flat return, moves up, flat, and then and up and down and so on. Of course, this is a slightly older graph, but I mean, that's, you get the picture. So it's like it's like Virendra Sehwag. I mean, suddenly he could blast 300, or he could just go out first ball. So we have to get used to it and appreciate that the stock market behaves like that. Now, many people believe that the kind of returns that we had after the Harshad Mehta scam, that is, the Sensex was flat for about 10 years. Many people believe that such a thing can never happen again, because now we are in a much better economic state. While that is true, we must understand that for much of the 90s we had a very turbulent political thing going on. The governments were not stable. There were hung assemblies. There was no majority government. So a majority government is also important for the stock market to for stock market investors, because the market investors are going to speculate. They're not going to invest based on what's happening today. They're going to assume, okay, because of this development they'll get better returns in future and invest. So if there is going to be a hung assembly somewhere down the line, I'm not saying there will be, but if there is, then definitely it will affect stock market returns for years together. So nothing is known. There are no guarantees. We just don't know what's going to happen. But all that said, the simple secret of equity investing is that you keep investing, you buy as many mutual fund units, you buy as many stocks as possible, and wait. There will be, sooner or later, there will be a bumper return that will change your life. So it's a waiting game in that sense. So in that if you look at it from that point of view, there's really no difference from an investor who is timing the market and who says time in the market is more important, and who is buying and holding. There's really no difference. Everybody is waiting for that bumper return. That bumper return is the only reason why you stay in equity. I mean, the good thing about equity investing is that it gives you multiple opportunities. You don't need to worry about, oh, I have lost that opportunity to gain from the bull run. No, you just need to stick with it. You're going to get bumper returns in future. You're going to get bumper losses in future also. It's inevitable. You just need to stay. The sure shot way of method of timing the market is to accumulate units, so that when that bumper return comes, you have enough units and it will change your life. Now, today, if you look at it for the last 6 months, I think from late October, November or so, the market is not going anywhere. That's because after the pandemic, the markets, when the pandemic started, the markets crashed because of panic and fear, but then it recovered, it regrouped, because the stock market saw the potential in future returns. But then the efforts taken by the government to stabilize the economy around the world is starting to show up now. For example, we have high inflation, and because of that, the markets are not so confident, and the investors are not so confident. So there's no spectacular good news, or there is no spectacular bad news. So that's the reason why it's kind of in it's not moving anywhere for the past 6 months or so, but that's fine. But that's the best time for you to accumulate as many mutual fund unit and as many stocks as possible if you are a stock investor. But do it within an asset allocation. You don't need to go overboard on it. Within an asset allocation, within a proper goal based plan, I would recommend continuously invest. There is nothing beats systematic investing. That's the simplest way to wait for that bumper returns. That's the simplest way to time the market. In my opinion, systematic investing is also timing the market. You're just waiting for that bumper return. So of course I am a victim of my own good experience and bad experience. My line of thinking is shaped by that. But if you take my case, there were two periods which changed my life. Two of those bumper returns. Now, for the first 5 years after I started, there was really no returns. I was getting nothing. It was basically my portfolio was read on a daily basis. You can see that here. This is a gain or loss in my portfolio, and you can see that after that, in December 2013, when the bull market began, it was a life-changing experience for me. I actually rubbed my eyes. I refreshed the screen to see what is this portfolio. I actually went back and checked. I went back to the school units place, tens place, hundreds place, because that was the kind of gain that I was seeing every day, and the daily profit I was making because of that was equal to my monthly investment at that time. And the reason why it changed my life, it pushed me to the threshold of financial independence, which is 30 times monthly expense. It's because if you look at the investing CAGR, my investing CAGR, if you can see, it was pretty high compared to what I was investing. I started with an SIP of 1,500 rupees in June 2008, and you can see I was investing, compared to that, I was investing 200%, 150%, 100%. Of course, it fell down because naturally it will stabilize. But then that was when I was dumping in money as much as possible relative to the 1,500. Today, I am investing more than what I invested in this period. But relative to the 1,500, I was putting in money, and therefore I got the proportional gains. Many people make the mistake that you become, they think that you become rich because of returns. You don't become rich because of returns. You become rich because you put in money. You need money to make money. So young people should focus on increasing their income and systematically investing as much as possible. Don't just start an SIP for 1,000 rupees and so on and leave it and forget it and do something else. In fact, I would say don't start an SIP. You manually invest systematically every month as much as you can. That is where you build real wealth. And if you, during such a time like this, if you keep investing regularly as much as possible, when the bumper return comes, it will change your life. So the second time my life changed was, of course, during the pandemic, post the pandemic, the bull market. From March 2020 onwards. So from that time, my financial independence status became a lot more stronger. Today, if you take my monthly expenses, of course, that has increased significantly since that 30x time. I have about 18 times X in a debt corpus. The rest of it is in equity. So 60% equity and 40% debt. So it's still market linked. So tomorrow there's a big crash. Of course, I may even lose my financial independence status. That did not happen during March 2020. I'm hoping it will not happen again now. But anyway, it's still market linked. That's the point. But it is the second time that bumper return happened. It did not cement my financial independence status because it's market linked, but it strengthened it significantly. So that is what everybody is waiting for. That's the magic we all want. Those bumper returns are the best way to get those bumper returns, is to keep accumulating it, and you don't need to worry about when it happens. When it happens, it will change your life. So please don't have any second thoughts about postponing your investment. Should I invest now? Should I wait now? Don't have all those kind of thoughts. Just blindly invest as long as your needs are far away. You can systematically invest as much as possible, even every month. If not every year, do it every month. Aggressively. That's the best way to do it. And young people should improve their income by upgrading their skills. Bye bye.